This is Chris Carlson, and welcome to the Bolder Banking Podcast. My guest on this episode is Karl Nelson, founder and CEO of KPN Consulting. Karl was instrumental in the conversations that led to the creation of GSBC's Executive Development Institute for Community Bankers, and he currently serves on the EDI faculty. This was a very thoughtful conversation where we discussed the top developmental needs for community bank CEOs, the importance of bank executives having a deep understanding of liquidity and credit, succession planning for community banks, and what bank leaders of the future will look like. Karl, thanks for joining me today.
Chris, it's a delight to be here with you, and it's a delight to be part of the outreach from the Executive Development Institute in Boulder, Colorado.
Karl, we have a lot to talk about today, but to kick us off, can you give us a brief background of Karl Nelson?
I'd be delighted to, Chris. Basically, you're looking at someone who's done a lot of different things in the industry. For 18 years, very involved directly with the industry, mostly in credit roles. And then 12 years at the Federal Home Loan Bank of Atlanta. And following that, I worked with some firms that are consultants to the industry. So it's been a very long and varied career.
So you have an interesting perch about our industry. And the first question I'd like to start off with is, what are the biggest differences in bankers from when you started in the industry to today's bankers?
And Chris, I'll tell you, I started in 1972. And the industry that was in place back in those days really was a much simpler place, a simpler world, if you will. It was basically, how do I bring in deposits at this rate, and how do I put them out in loans at that rate? And the spread back in those days was as high as 6%. Today, even though there are a significantly fewer number of institutions, I think the landscape has become much more complex. And I think today we've got to worry about so much more than just the margin in our business. The whole idea of gathering funding, if you will, deposits and other forms of funding has changed pretty dramatically. So I would say it's just a much more complex business, and frankly, a much more interesting and challenging business than was true in the 1970s.
Do you think our bankers are up for the challenge?
I do. I think we are, but I think that we really have some adjustments to make. And I'll just say that the key adjustment is dancing right before our eyes right now. And that adjustment has to do with trying to figure out what to do when you have no playbook from the past. And the pandemic has certainly created that scenario in our industry. So I think the ability to adapt to environments that you've never seen before is probably the greatest challenge we face today.
Karl, do you think it's as dramatic as being in a adapt or die scenario for many banks?
I think what's happening in our industry is you are slowly but surely filtering out institutions that don't have a good game plan, if you will. I think for most of my career, very small rural banks have been protected by the lack of competition from other larger banks. But with the advent of fintech and its role in today's financial service business, I think that advantage is rapidly moving away. And so I think it sort of leaves us with, you better figure out how to best serve your community, and you better figure out how to do that profitably enough to continue to have people be interested in your organization. So I think the bankers that are left, and just give me those numbers. When I joined, there were probably 20,000 banks and thrifts. We're down to about 4,700 and change today. So what's left, I think, is very good. It's been through some very difficult moments, the whole of the 1980s, the Great Recession, the pandemic. And so I feel good about what's left, and I feel good about most of our bankers' ability to adapt to whatever's coming our way.
Well, certainly leadership is going to be a big key going forward. And I really want to start to delve into the EDI program at Graduate School of Banking in Colorado. And I want to go all the way back. Can you tell us about the conversations that took place between you and a select group of individuals that were the genesis of EDI?
Sure, I'd be happy to, Chris. EDI, of course, is the brainchild of the Graduate School of Banking, Colorado, and Tim Koch managed that program for many years. He's been very ably succeeded by Mike Stevens, and this kind of outreach is something that Mike Stevens is very good at and favors. But what happened was during one of the summer sessions in the graduate schools of banking around the country, there are 6, all good banks. I've taught at several of them. But the one in Colorado is interesting in that it sort of draws from what I would call the upper Midwest. And it was during one of those sessions, I would say about 6 years ago now, that Tim Koch asked several of us from the faculty to sit down and talk a little bit about an idea that he was thinking over. And that idea was, is there some way that we can have a more advanced education for folks who are attempting to move on to actually being at the top of the hierarchy in a typical bank? And I had a little bit of experience with a fellow named Bob McGoffin at Sheshanoff, who, when he was around, was very interested in what he called a master's degree in banking. And so Tim asked me, along with a fellow named Don Musso, Don Noling, and of course Mike Stevens, to lunch one day to talk about what we could do to create that. And that really was the genesis of EDI, which in Tim's case, it only took him about a year after that first conversation to have this thing from an idea to a reality. But it was Tim Koch, really then with Mike Stevens coming behind him, that have created this advanced education, if you will, for bankers.
Well, there's a lot of brain power in that initial meeting.
Chris, it was interesting because Don Musso and I were frankly there to do what we called the hard side of banking. And what I meant by that was the ALCO process, enterprise risk management, the credit process, the things that sort of make the engine run. Don Noling was there because he had an excellent background, both with the Fed and then in his own practice with the leadership side. And so what had to happen at that meeting is we sort of had to come to grips with, how do you combine both the idea of the soft side, the leadership side, if you will, those skills, with the hard side, the running of the bank. And so that was a good group to have together for that conversation.
Well, as you look at the landscape today, what do you see as the top developmental needs for community bank CEOs and C-suite executives?
You know, Chris, I've given a lot of thought to that, and it's been interesting. I still think that leadership, and particularly understanding the next generations, is going to be quite a challenge for many of the folks who run banks today. And I think they're going to have to do probably more compromise with how they believe things should be run versus what those next generations are looking for in terms of a career. But lately, I've been really wondering if the top folks in our industry completely understand what's happening in the political environment. As an industry, we've been very, very keen about staying away from politics, but the more involvement I've had with this industry, and particularly with conversations we have with several groups in Texas, it becomes very clear that CEOs in particular are going to have to get involved with the process. And they're going to have to realize that we're an industry that needs to have a voice at the table. And without that voice, things can happen to us that are not going to help the industry. So I think the number 2 thing after leadership is probably understanding the political process, and more importantly, getting involved in the process. And I think those 2 things are really the challenges we face.
When you talk about the political process, is that at the national level, the state level, or yes and yes?
Well, yes and yes. At the state level, that's the easy one. At the state level, we have state banking associations who do a very good job of following a legislative session. And most folks don't realize that state legislative sessions are brief. In general, they're held from January to about May. In some states, they're only every other year. But during that session, you might have 5,000 bills raised. And the job of the association is to make sure that whatever is being talked about in the legislature is not going to hurt the industry and hopefully will help the industry. So at the state level, it's really just following what's going on. At the national level, where the ABA and the ICBA really do a great job, what you've got to watch there is really the political mindset of the administration in power. There are some administrations who will be very focused on regulatory issues that may not be to our liking. To give an example, I think there's been a lot of conversation about the CFPB and the role it plays. Well, that's an instance of an organization that we should have been paying much more attention to at its creation during the Great Recession. So that, I think, is really how it has to happen. We've got to get involved at both the state and federal level and support our trade associations. We have a voice. We just have to support that voice better with both our money and with our appearance. We are the voters that these folks are concerned with, and we've got to recognize that power.
Well, Carl, you mentioned soft skills and hard skills. Let me ask you a question about the hard skills, if you will. What's the most important thing moving forward that a banker needs to understand about their bank's financial performance?
Well, the engine of our industry is clearly the credit side of the industry. This is where the profitability occurs. But underneath that layer is something called the asset liability process, or the ALCO. And what I've discovered in my years is that despite the fact that credit is the driver, the understanding of how the various functions within a bank all come together to make that profit is really the key issue for most of us. And so I would say most of the time, the CEO of a bank has a pretty good background in credit, because that's often, frankly, where the CEO comes from. But I think the CEO also has to spend some time with the ALCO process to make sure they understand all of the issues that the ALCO encompasses. And to me, this becomes one of the most important things that lead bankers at the top of the chain, have to understand.
So you talked about the lead bankers. What about those relationship bankers that are out there working every day with businesses? How much information or how knowledgeable should they be regarding this process?
Well, it's interesting. The term relationship management is probably only 20 or 30 years old. We just used to be lenders. But I think what's happening is we have to be able to understand the needs of the customer. And in order to do that, we have to do a better job of listening to what the customer has to say. And so I think if you really want to develop a relationship these days, you've got to understand that it's a process, and that process always starts with listening, understanding what the needs are, and then finding solutions to those needs. And I think that can be challenging to many folks who have been doing this a long time. You have great consultants, if you will, in the industry, but a lot of the folks that are out there are unfortunately too focused on selling something. And that's really not how it works. You've got to find the need, you've got to solve the need, and then you've got to bring that to the customer in a way that they understand. To give you an example, the other side of the balance sheet, not the loan side, but the deposit side, if you will, have become increasingly complex. And one of the things we're seeing today is the creation of something called treasury management. In my day, it was called cash management, but what it meant was there are other people outside the lending arena who have to have a better understanding of all of the ways that a bank can help a client. And many of those ways, frankly, are on the operations side, the checking account, the how do we make deposits? And that has become very complex. So I think what we're seeing today is good for the industry, this creating an expertise on the liability side of the balance sheet, particularly in this treasury management area, I think is a key component of success in the future.
Well, Karl, let me ask you this. In your peer group sessions at EDI, what are the biggest takeaways from the participants when it comes to liquidity and credit?
Well, the idea of liquidity has changed dramatically in the time I've been in the industry. In 70s, even into the 80s, liquidity was essentially a function of, well, how much is left after I lend, and how much of that goes into liquid instruments, typically the securities portfolio. But late in the 1980s, two major events occurred. One was the advent of the Federal Home Loan Bank system being able to provide service to the commercial banking arena. And the second was the advent of what are called broker deposits. And so what we see today in our peer groups is, particularly at this moment in time, a lot of questions about what is liquidity. And Chris, one of the most interesting things I've seen during this moment, when the liquidity that we usually factor in as the key to understanding a bank, the historic loan to deposit ratio, if you will, suddenly we have an industry that's got the lowest loan to deposit ratio I've seen in my entire career. And yet liquidity is an issue because rising rates, quickly rising in the way they have in the past really 8 months, have created a significant problem. When you hold fixed rate securities in your securities portfolio, they're there for liquidity. But right now, they're not really playing a role in liquidity because they cannot be sold. To sell securities in this kind of a market would be to take very large losses. Not anybody's fault, it's just the interest rate environment. And so from the liquidity standpoint, lots more questions about the other kinds of ways to get liquidity to your balance sheet. Those being, frankly, Federal Home Loan Bank advances is what they're called. They're loans to banks, or going through the broker deposit marketplace. So I think a lot of folks are sort of updating their policies now about access to other forms of funding that would not require that they sell securities. I call this the liquidity portfolio that isn't. And I'll be honest with you, I don't think I've seen this before in my career. So this is a really big deal with liquidity. And I think funding is going to take front and center for all of 2023. We will not be able to sell those securities without significant losses. And so we're going to have to protect that portfolio by making sure we can continue to fund it. And the deposit business, which grew in an outsized way starting in 2020, will not fill the bill. Deposit growth is 5% a year at best. But during the last couple of years, it's been averaging more like 15% a year. And that's simply not going to stay in our world. So we're going to have to find other ways to fund.
So when you're in the EDI sessions and we start having discussions about liquidity and credit, do you see eyes glaze over or just really excitement about, wow, I'm loving the fact that I can learn something from my peer group?
Well, the key to any peer group, quite frankly, is for people like me called facilitators to toss out a problem and then get out of the way. Because what these folks are here for, and Chris, I should mention KPN does peer groups in 8 different states. And so we get a great cross section of what CEOs, CFOs, senior lenders, and treasury management people are thinking. At EDI, what we're getting is really top-notch people who are in line for running the organization. And they're there because they want to learn from the others. And so in a peer group with EDI, it's really my job to toss out a problem and get out of the way. And they learn from each other. And it isn't just in that session. We encourage everybody to take those relationships they develop in those sessions and stay in tune with those, typically tossing out questions. To give you an example, the big question in the last month has been, what is your salary adjustment concept for 2023? Well, we've had several of our groups toss that around within their own groups, just trying to figure out what the top minds are thinking. And I think that's really the secret to a good peer group. And the EDI is probably one of the best ones simply because of the quality of the people in those groups.
Well, Karl, leadership, succession, and community banking is getting a tremendous amount of attention. Do you think this is a cycle, or is this going to continue to be a focus?
It is a very, very long-term essential ingredient of where we're going. We will have to have good leadership because we will more than likely face other kinds of situations like the one we face today, where there is no roadmap. If leadership has a roadmap, in other words, if they can look back at a period, particularly in their careers, that looks like what we're in today, then the solutions can be much simpler. But when you're looking back and seeing no such period, you really have to be a leader. You've got to do a much better job working with your people. I mean, all people in the organizations. It's amazing how many folks in any particular bank have great ideas that never rise to the top. But good leaders are going to have to learn how to tap into that resource in order to come up with solutions in the future. So I think what happens with leadership is it changes because the way we deal with people changes. But I think it will never be out of style. And I'll be honest with you, we lose between 220 and 250 banks a year. And I would say succession planning, that is to say a lack of succession planning, is the number one reason why banks merge with others. They simply don't have the leadership to continue on an independent track. So to me, it's all about leadership.
And so how will bank leaders of the future be different than past bank leaders?
Well, I think that's the same answer for all industries. The era of the dominant CEO, no matter what the industry is, but particularly in banking, at least to me, is over. A CEO has to be able to make the tough decisions, but rather than make those decisions in a vacuum, a good CEO will first gather as much information from the resources that are available to that person before making that tough decision. And I think this is really the essence of leadership in the future, being able to surround yourself with the kinds of people that can help you. But at the end of the day, the CEO has to be the one who makes the tough decisions. And I think that what we've got to do, when I say we, I'm talking about the folks that are trying to work the education side of this industry. We have got to do a better job of creating leaders who do understand the power of listening, who understand the power of consensus thinking, and who know how to make a tough decision when nobody else can. So I think what we've got to do is we got to try to find ways like EDI in order to provide a more rounded education to the future leaders of our industry.
Well, Karl, you've been kind enough to share some great ideas today. If somebody would like some more information from you or would like to have a conversation with you, what's the best way for them to contact you?
Well, two ways. One, my cell, 770-262-8446. And the second, my email address, knelson, Nelson, at kpnconsulting.net. And we'd be glad to answer any questions you might have if you choose to use that vehicle.
Karl, it was awesome talking to you today. Thanks for your time.
It's a pleasure, Chris. Thanks to you and EDI for this outreach. It's a great idea.